Good morning, good afternoon, or good evening, depending on the part of the world you're joining us from. I'm Bearable King from Bearable FX on Telegram, and I quickly want to run a top to bottom review on what the pounds dollar could do in the next 6 months to 1 year period. So please follow me as we delve into the charts. All right, so what you have right now on my screen, or what I have right now on my screen, is the monthly time frame. Okay, and the monthly time frame, as you can see, as far back as 1972, when I'm sure a lot of us were probably not born then, including I myself, we can see the market has been in a kind of downtrend. All right, came down in 1976, came up in 1980, and in 1985, the price came down to the lowest point ever, which was 1.0688. And from then till now, the price created a new low around that same region, sometimes last year. And right now, as you can see, we have a nice reversal here. So because of this reversal, what can we expect from the market? We can expect that it's possible that this market could come back to this level. The reason why I use monthly time frame is to give myself a range of what the markets could do within a short period of time. What do I mean? In this chart that you're looking at, because I've marked the monthly key areas with my blue rectangle, it is possible the price could come here. This is 1.0459, or the price comes back to this low, which is 1.0659. All right, that's what it simply means. That's the reason why I need this guide here. Aside from checking out the key areas on the monthly time frame, I also like looking at the candlesticks formed. All right, so on the candlestick, we have a nice pin bar rejection, followed by an inside bar setup and a bullish push up. Now, after this bullish push up, we had an engulfing bullish candlestick and a bullish candlestick confirmation, which tells me that, okay, most likely this price is going to do what? Continue going up. Okay, so since I know this on the monthly time frame, what I'll be looking for are opportunities to buy. Okay, now moving to the weekly time frame. Okay, on the weekly time frame, what I've done here is within the monthly time frame, I've marked places of interest. So for example, here you can see that the market rejected this point. The market rejected this point. The market bounced off this point. The market struggled here a bit. The market retested this point, retested this point, retested this point, had a pullback here. You can see there was a rejection here, then bounced, dropped, retested it before coming down. That's the upper key level. For the lower level, you can see the price tested this point, tested this point, tested this point, came to test this point. Now, in as much as this shot below the chart, you can see that it's a bullish reversal, a bullish engulfing candlestick. You can see here is a bullish engulfing candlestick. So the drop here and return back shows that this level is still holding. Same with this place. You can see this level also held there before the break, and the price has been bouncing around this level. So what am I expecting here? I'm expecting that the market could either come down here or come up here. All right. Now, if the price comes up here, I know that the market is not going to go straight. So we could see a move. Let's say, for example, next week we have a bullish candlestick. The market can move up to this point, pull back a little before coming out to this area. Because I don't expect that the market will just move once, because we are looking at the monthly time frame. So on the lower time frame, you could see some pullbacks. If you know Forex properly, you hear that the market does not move in one straight line. So I have marked this level because I know that the price may move up to this area. Now going to the daily time frame, because this is a long-term view, all right? Now, if you've been following me for a while now, you know that I have been watching this market closely. And the reason why I've been watching this market closely is because the market was ranging. The market has been ranging. What do I mean? All right, fantastic. So what we had was an impulsive move from this place up to this place. This was in December. Then from December, the market pulled down to this point. All right, which if you can see by this side is an order block set up here, because this is a push, pull back, then a push up, and the market came up here. So from here, the market came down here. After it came down here in January, the market pulled up to this top, giving us an equal top. This was around the end of January into February. Then after this point, the market came down here in March, giving us what we call a double bottom. Now, after that, what we could see here is the markets got to this point and started fighting. When you see the market raging, it's usually a fight between the bulls and the bears to see who would give it. Then what now happened? The market now broke it here, came down here, and gave us a proper break above it. When you see a proper break out of a range, you have to see a bullish candle above it, which is what we had here. So people who were with me last week, I told them that from here, I'm expecting the market to come down to this point, retest it, and if we have a candlestick confirmation, we should look for a buy to this area. Okay, so from the monthly, we know that the market is bullish because we have a candlestick confirmation that the market wants to be bullish, with an engulfing candlestick pattern, bullish engulfing candlestick pattern, confirmed by a bullish candlestick which was formed last month. On the weekly, we can see that the market is pushing for a higher high. And now on the daily, we can see that the market has broken out of this range. So if a trader is going to ask me, Bear Bull King, what are you expecting from the market? I will tell you that from this area, between this region, we should be looking for a reversal candlestick confirmation, meaning that maybe a bullish engulfing or a hammer or an inverted hammer that will push the price from this level to the next zone, which is around 1.3318. So from here to here, all right, this is what I'm expecting. If you're a swing trader, I would probably say wait for the candlestick setup, then you set your buy, which is about 1,000 pips. You could set your stop loss below the candlestick formation or give it room for it to push up. You could also set it here. This is also a good ratio. You're risking about 430 pips to make almost 1,000 pips, which is not bad if you ask me. All right. So if you want to make inquiries or comments, please feel free to contact me on Telegram at BearBullFX, and I would be available to attend to you. Thank you very much, and stay tuned for the weekly reviews.